Okay, great. Glad to hear that. So let's get started this morning. So first of all, let's look where the zones are. I will publish those zones as soon as we get off the meeting. Hopefully, I finish a couple minutes early this morning. We're trading about in the middle of the range, the overnight range. 71 was the low, 83 was the high, and we're currently trading at 77. So what I would expect after having all these rips up and down, the overnight range was approximately 12 points. And my guess is we're going to have a balanced day here. We're due a balanced day. Let's put it that way. And I don't see a lot moving moving the market this morning in terms of econ. I did not check to make sure we don't have an econ coming up at 9 a.m. So let me verify here real quick. Excuse me, I take it back. We do. We have ISM at 9 a.m. So depending on ISM, and as long as it comes in within line, right? These are the options that I'm looking for in ES. Okay, so if we open at 77, that's going to put us approximately right above the gap fill. And my guess is with the strength, so trying to get a read on the market obviously has been a little bit difficult with the volatility. So my guess is with the strength that gap fill will hold based on Friday. Again, a lot of this will depend on, I'll watch NQ for a heads up on which way we're going to take it. So if we open and hold the gap fill, I would expect a rotation up to Globex highs. And then if we get a push at Globex highs, this is proven overnight to be pretty good resistance. Then a test of Friday's highs would be next. But I would actually expect responsive sellers either here or Globex highs. Again, what will I use to measure to figure out what size rotation I need out of the gate? Well, I generally want a minimum of a 6-point rotation. So if we open at 77, that's going to put me at the very back of this zone to take a short. Now, just remember, early in the morning, if we get an open drive up, what are the indications of an open drive? First of all, we're not having a gap, or at least if we're having a gap, it's very unsubstantial. So that lowers, in my eyes at least, it lowers my alertness in terms of looking for a open drive higher. The first 3 bars will generally be 1, 2, 3. That's where they're all green. That's the first dead giveaway that we're having an open drive higher. Something to be aware of this morning is often prior to a big number, what we'll have is something that looks like this, simply waiting for the number to come out. And then based on that number, right, we can end up with essentially a 9 a.m. quote open, where we end up with an open drive higher or lower. So what you'd want to watch is, again, those first 3 bars after 9 a.m. Are they indicative of what normally an open drive looks like? So we get to 9 a.m. and we either have something like this or something like this. Okay, and then if I see that, I'd be on alert for a trend day up or a trend day down. Obviously, we've been getting an abundance of trades, an abundance of trend days. And so here's the issue when we're getting the market as wide as it is. There's 2 questions. Has this volatility shift that we've experienced in the last 2 weeks here to stay, or is this a small anomaly? And then we're going to go back to our normal 10 to 12 point ranges, maybe 15 on extensions, right? Or are we going to stay at these really 17 to 25 point 24-hour extensions that we're getting? And it'll make a big difference in 2 areas. First of all, if you leave trailers, quite clearly, all right, you have the potential of a 10 or 15 point trailer if you get good trade location, right? The second thing that makes a difference is the size of the rotations. If we're going to continue with this wider range of volatility, then I have to push my minimum rotation size from 6 points closer to 8 points, right? To make sure I have enough of a stretch and I get a rotation back down. The other thing that I want to do the other thing I want to be very aware of, 25 minutes in a zone, right? Where we sit here like this, just balancing. Even if it's a point out of the zone and I get to 25 minutes, I am most likely covering very quickly in this market. Why? Because the range of the volatility, because the range has increased, right? If we sit there and we get 25 minutes, that break can very quickly drive me to my stop. So it doesn't leave us the luxury of, well, I don't know why it's doing that. It doesn't leave us the luxury of waiting around much past that 25 minutes without getting stopped very quickly, because the jump in and the move is so quick that you're just going to end up with your either 2 or 4 point stop. Also, please recall, for those who are new, the stop that I use on these zones, again, you have to come up with your own trading plan, but I generally use 2 points behind the zone. And I also focus simply on the first time into the zone, right? Second and third time require more evidence, and I almost never take a third move into a zone. If it works, great. I'm simply not going to be the one that trades it. So my expectation on the open with the 9 a.m. news coming in is that we will balance. We'll either balance from up till 9 a.m. We'll either balance from gap fill to Globex high, or if we fill gap fill and come below that, we will test Globex low. We'll either, my guess is we balance here to here, or we're going to balance here to here for the first half hour. That's my guess off the open. After we come out with the ISM number, obviously you have to give the edge to the buyers, which means if we make a push, right, what will be the test to see that we're pushing higher? Well, first will be to get above Globex high will be the first test, right? Friday's high will be the next test, but there's not a lot holding us at Friday's high. We spent very little time there. It'd be fairly easy to push through because there's not a lot of people to defend. So if we get above Globex high, what I'd look for is into Friday's high, and then this becomes a test, right? We're either going to hold Globex highs and push higher, or if we push to Friday's high and we close back below Globex high, I would expect to push back down to Globex low, right? A trap trade will normally push us from the high end of the range to the low end of the range. And I would expect responsive buyers again. Again, I'm looking for today to get a consolidation. We've had so many days of wild movement that it would seem like the market's exhausted unless that ISM number, is way out of line. So if we have a balanced day, there'll be a couple of things that'll be a tip-off. First of all, on your tick, the NYSE tick will stay predominantly between plus 500 and minus 500. That'll be the first clue. If we're well above that and holding, or well below that and holding, obviously the balanced day is off the table in terms of consideration. Continuing with the balanced day concept, right? A balanced day will generally have a push to extremes, and we will constantly push back into the middle. So that push, right, on a balance can look one of multiple ways. And let me show you. We can still end up with a pop, right, and get up into Friday's high and even move to the zone above and still have a very wide area balance where we just kind of come in this 10-point range up and down like this for the balance of the day. Or conversely, we get below gap fill and we fall below Globex low, but even come into Friday's low, right, and still end up with a range like this, up and down. And if we end up with a really extended range, it can cover the entire range. The best entries on this, right, are always going to be at range extreme. Some of the frustrations that come with balanced days is that I tend to not take anything other than the first move into the zone. There are other trades that are valid if you can identify that it truly is a balanced day. However, I tend to skip them, right? Don't fall into the trap of getting into a balance and then assuming we can't break one way or the other, because we can break out of balance, particularly at the end of the day, if shorts have compiled or longs have compiled at one end or the other, and they break that. But you'll be able to see pretty clearly where the stops are accumulating if we're in balance. And again, if we're in balance, the first and second trade should be fine. Caution on the third trade if you're taking that. If we extend up, I will take a moves up. I will take a short from this trade location, again, assuming I can get a minimum of a 6-point rotation, maybe more. And I will take this location first time in, right? As to whether I take the front or the back of the zone will again depend on the size of the rotation. And you may want to use tick divergence, which I certainly do, right? A 1-minute tick divergence to help place location within the zone. I wouldn't expect that we get much past 1801, but if we do, 1804 and 1806, and then above this 1810 and 1812 are the levels above. What would be required, right? It would look something like this. We open, we get above Globex high, and then Friday's high. My guess is when we get to Friday's high, we'll have a backside test, but then we'll get above and hold above Friday's high. A rotation down, again, from Friday's high back into Globex high. A a 6-point rotation down, if we get towards the back of the zone and we rotate down, would be a valid entry the first time down for move back up to Friday's high and then to extensions to these points. And again, I would look for rotation at each of these points back down, and I would actually expect a larger rotation down if we get into initial resistance, and possibly, right, in the afternoon, if we extend down below Globex highs, right, it's certainly possible we sell off back into Globex lows. Possibility. If we get this reversal, what time would I be looking for reversals? That's key. This 10 a.m., 9:30 to 10 a.m., all the way up until 11:30 is a key area for reversals, both on the upside and the downside. And if I'm going to try to stick a trade to the downside or get aggressive in a counter rotation or a reversal from the lows, right, I'm going to try to do it in this time period. And all I'm simply going to do is leave trailers from these zones. I will not execute outside of these zones today unless I simply read that we're having a trend day down. But as of now, I will not execute outside of these zones. And the only trade I'll take outside of these zones is a zero tick trade. So let's go through what the downside scenario would look like, right? If we open up and, well, first of all, obviously open drive lower, but let's assume we're not going to have an open drive lower and we're going to end up with balance until we get the ISM number. The first test will be, do we fail at Globex highs or Friday's highs? Also, do we get above Globex highs, get to Friday's highs, and then trap below, right? Obviously, gap fill will be the first test down in. At this point, it looks like we are opening 1776 right in it. So if we open at gap fill and we stay in this area, I will be cautious at taking this zone, right? Once we trade out of it, it makes it very difficult to trade in this area. So what I'd want to see is, assuming balance post 9 a.m., if we get into Globex lows, assuming a good rotation, I would assume we get responsive buyers at 1771.50 area, and then push back up to gap fill. This then becomes the test, right? If we can get above gap fill and hold, the assumption would be Globex highs and Friday's highs, right? And so remember, I'm not trying to figure out, key in this, I'm not trying to figure out the entire day. The only reason why I care whether we get a trap trade from either side of this is if I'm leaving trailers. For most of my coaching clients, guys, y'all do not care about this. For those that are leaving trailers, you already know, right? We take our 2 points, move the stop either to net break even or break even, depending on what your written trade plan is. Follow the written trade plan. And the rest of this doesn't matter. It becomes very hard, obviously, to guesstimate, particularly with the wide ranges, exactly what the entire day is going to look like. It's easier when we have narrow ranges. If we get below Globex lows, I would expect responsive buyers, and I would be a buyer into Friday's low first time in, right? But the second time in, I'd be cautious. If we get below the 1765, I think it would cause a great deal of concern. The last area to hold would be Friday's Globex lows, and I would expect, again, an attempt at a responsive buy, but I would want this attempt to come quickly. If it sits in the zone and I can't get my 2 points within probably 10 or 15 minutes, I'm probably going to bail on this trade pretty quickly, because that leaves us a lot of room to explore on the downside. I would expect responsive buyers the first time into 1750, 1752, and I will be a buyer there. I'm willing to take a loss here. I'm not so sure I'm going to take a trade at this zone if Friday's lows break. It depends. If we bust through straight away, right, just a little pause, then bust through, I'm willing to take a trade here, because most likely we're going to come up for a backside test. If, however, the break comes, we get into Friday's Globex lows and we sit like this, and then we break hard like that, I will go to the next zone lower, and I will not take a trade at this zone. When we get into initial support, right, it's going to be key that we get back above this zone, and that'll be the test, right? If we rotate up and we fail to get back above after a small rotate, I would expect a rotation down, but it needs to be small, and we don't get right back above it relatively quickly, well, obviously I'll have my stops moved up at this point, but I would look for the downside scenario to play out at that point. Really, that's all I have. I'm going to let NQ guide me. Let's look over, before we do that, before I look at NQ, I want to look at the overnight charts that I posted, some of the trend charts really quickly. Okay, so I sent these out to my clients this morning. Now remember, all trend lines tell us is where the market has been, but it tends to give us good history of it. Makes it easier to see where the higher lows are coming in and where the larger time frames are intersecting each other, right? So if we're opening 1776, that puts us right in, well, we're opening 1774, which puts us right in here, right? So in terms of rotation and looking at where we would get rotation and where these trend lines are holding, I would expect if we can get a zone lined up with either of these two areas, which obviously that'd be that 1781 and 3/4, that we the first time up in here that we would get responsive buyers, excuse me, responsive sellers. If we can get above this area, okay, this is where the change would come in, right? If we can get, obviously we respected this overnight. If we get above, we get a rotation into this zone, and then it would be quite easy to just kind of follow this thing up all day. The option B is, right, we get above, come up here, reject, and then come back to the downside test over here late in the afternoon and find responsive buyers in this area. Again, this is just another way of looking at how the market responds. Obviously, you can tell we tend to break these just slightly, and you can tell on Friday when we moved up, we broke this, right? We exhausted the buyers right here, and we fell back into the range. So it wouldn't be unusual to see us get above the range, make a push up, get them exhausted right here, and then push back down, and then it becomes a question mark either way. On the downside, we're now opening below gap fill, right? And we're opening 1774, 1775, just slightly below gap fill by 2 points, right? So if we open here on the downside, it wouldn't be surprising to see a downside push right into the 1770 level and find responsive buyers here or even here and push back up over to the other side of the channel, right? If this occurs, I would expect responsive sellers the first time into the other side of the channel. After that first push down, then it becomes a question of, are we going to push back to the other end of the range and the zone's lower, or will we begin to drive up and try to find this other, and eventually, I wouldn't imagine we do it in the same day if we get down here, but eventually push up back up to the 1792, 1794 area before we find responsive sellers. That's on a 1500 tick chart. I just simply put out a smaller time frame chart, excuse me, a larger time frame chart. This is that same look on a 5,000 tick. Okay, we have a larger channel that was holding from the top all the way up here between this 1810 and 1800. Obviously, we'd be well stretched up there. On the downside, we're sitting right on the backside of this trend. This is the same thing you saw in a smaller picture on the 1500 tick. Also, looking at the bottom, it would be interesting to see if they're going to try to respect this double bottom. How would we know that they're respecting this double bottom? We'll end up with a higher low. We'll see responsive buyers before we get near this double bottom. Again, if we get to the double bottom, it would be concerning. Obviously, whenever you get a motion, right, we are on a larger time frame setting lower highs and lower lows. Larger time frame, smaller time frame, they're trying to set up higher highs and higher lows. So what I'd want to see if we get a rotation of the downside, if I see a quick snap in this area and before we get to this double bottom, I would think that there would be room for a push all the way back up to the other side of the range. If we don't get a snap here, we could certainly see a break, and then a test down to 1750 is certainly reasonable. It's just another way of looking at that exact same trade. On NQ led us up Friday. I would look for the strength in NQ again, and I would look for responsive buyers on levels lower. If NQ starts breaking new lows, I do not want to buy ES. Why? Because even on days when ES has been strong and NQ has been weak, NQ has been able to pull ES down eventually, and it trapped a lot of bulls there. Conversely, right, I want to be cautious on the short side on ES if I see NQ breaking new highs. This is with the exception of we're not identifying a balanced day. So I'll call that out because it's going to be, if we have balance, the extremes and the spikes will be where we want to enter. If we're not having balance, right, then those are going to be the areas we want to avoid, right, unless there are big stretches into zones. How will we make that distinction again? If it's a balanced day, spikes to 700, 800 will mark highs and lows, and you'll be able to identify it fairly quickly. It'll be easy early in the day, and then you'll be able to have a game plan for the rest of the day. If, however, you see us staying at 700, 800 ticks repeatedly and for extended periods of time, you'll know we're probably not in balance and look for another directional move. If we get a directional move, right, don't fight it. Stay to your trading rules. That's really the layout I have. I'm going to go look at NQ really quickly and give that same scenario. My NQ chart here. By the way, guys, I sent out this chart. I haven't posted it yet, but for my clients, I verify that I have this zone. I believe I adjusted it just slightly after I sent out the chart this morning, 1799 to 1801. And this area is going to be critical right here, but really the white zone is sitting at Friday's high, 1786 to 1788. And I would expect to see, like I said, if we get a drive at this point from 1774, I would, again, based on where we're opening, I'm most likely going to take a short here. And I'll probably attempt another short at the back of this zone, again, depending on rotations when we finally get here. And everything above here, I will take a counter trade, assuming I haven't hit my max stop for the day, which is 2 stops in a row, back to back. Looking at NQ. I wanted to try to wrap up here in a minute. Okay. The first thing I want to show, let me draw this in real quick. Okay, even though NQ has been strong, we have an issue here because we haven't been able to get really halfway back above here. And this is really starting to look, based on the size of the bounce, it's really starting to look like we're getting trapped halfway in, and we could be trapping buyers right here for another push lower. We don't have what looks like, at least to me, a double bottom setup like we do on ES, right? So that could be explained by one of two ways. Either there's going to be a rotation into ES and more conservative stocks, and NQ is actually getting ready to roll over to the downside, or it's going ahead and it's going to regain this upper half, which would mean essentially we got to get back above 3560, right? And then we'll make an assault on the old highs. But the way it's looking, right, we had a lower high on Friday. We only have one example of where we're trying to make a higher low, right? And I want to see, essentially, what's going to be key is for us to trade above this point. If we cannot trade above this 35.36, I would look for a retest of these lows or an attempt to make a higher low at the Globex lows from the 24-hour session, right? Also, there's a trend line that's running right here. I don't know if y'all can see that. That needs to get broken on the upside. Really looks something like this. Okay, again, they put that 35.60 at a key, at a critical point. In terms of today, it'll be important to get over this smaller trend line right here. Again, that puts us back into Globex highs again, and we just barely broke it. So if we get above Globex highs, I will be looking to take shorts here and here based on the rotation. On NQ, due to how aggressive the buyers were on the upside, I want at least a 15-point rotation up as opposed to the 10-point rotation, just to stay on the safe side. Again, this is not counting scalps, right? Just using the zones. So that means if we open 1775, excuse me, I apologize, 3509, right? The first area I'm looking at is 3525, which again puts us into Globex highs. And then below 3520, above 3525, if I really want to stretch, right? The biggest stretches have been 60 points, and that would put us right up here. And this is really where I want to try to stick a short. If I can get a trade from here, I want to try to leave a trailer and see if they'll push back in towards gap fill. Again, same issue on the downside. 15 points from 35.10 puts me at 35.95. I don't really have, that would be the back of the white zone for NQ. Again, if I get a rotation there, I will probably take a trade the first time in. And in that point, right, 15 points from each zone where I form any kind of base will be where I'm looking to take counter trades back to the upside. So I hope that clarified. The wider zone and the fact that we're not getting any movement overnight, we're essentially opening just below where we closed on Friday, is making the open a little bit more difficult call. Therefore, I'm looking for balance and chop primarily into the 9 a.m. And then after that, hopefully we'll get clarity, particularly from NQ. I'll keep an eye on NQ for direction. And obviously, the test will be on NQ, right? First of all, do we hold Globex lows? And then do we hold Friday's lows? Below Friday's lows, it becomes a little more iffy. And remember, if you're trading NQ, NQ can get much more directional without rotation than ES can. There's less institutional participation and it's thinner, so it can really rip. Consider that if you're taking trades in NQ. I certainly do. And remember, I use a full 10-point stop on almost all my trades in NQ initially, and then after my first scale, I move that up rather aggressively. But it can be difficult to sit there and take a 10-point stop on NQ. However, I find consistently with 5-point stops, I simply get tagged out of good trades. So hence the trade seems to demand a 10-point stop. That's what I use. Really, that's all I got. I'm going to look at volume profile real quick. We have a minute or two before the open. And in volume profile on ES, the areas that are of interest to me right now, on the upside, this really this 95, 96 area, really all the way up to 1800 is key. Beyond that, right, if we can get above, there's not a lot holding us till all the way up here. At 1820, of course, I don't expect a straight stretch. 1804, 1806 is still critical, followed by 1810, 1812 area. On the downside, obviously getting above the 1781 is critical today. Otherwise, we would find responsive sellers there. Also, you'll notice we are still, believe it or not, one timing on a 24-hour basis. We've been unable to get above. In the last couple of days, we've been unable to get above the prior day's high. Okay, so we're actually one timing and it's getting narrower. And you can see on 24-hour basis, we're actually forming a wedge there. And I would expect a break one way or the other from this, possibly for a retest down to the lows on the 24-hour or slightly below. This area right down here, the 1751 to 1757, very wide zone, right? And you'll see there's actually broken down into two zones there. I would expect responsive buyers in this area the first time through, and it wouldn't shock me to see a break, buyers, and then a curve back up. Don't forget, most days we have, right, whether we push up or down, the pattern tends to be like today. If we open down to an attempt to push back up, if we push down, we tend to get these curves midday, and then the afternoon kind of gives us three choices. It's harder to call from here, right? The scenario to the upside is we'll generally push down, push all the way up, just like Friday, and then we tend to push down back to, and generally if it's a strong push, we'll close in the upper third. If it's a weak push, we'll close back at halfway between the high and the low. So this pattern, again, this whole is pretty much what I look for on a daily basis, right? And this topping pattern comes the majority of the days between 10 a.m. and 11 a.m. It's not a rule. No one has to follow it. It's just the time of day I'm looking for it. It tends to be consistent in that time of day. So that's what I got. I hope everyone has a great day. It's a flat open. My guess is we're going to chop right into the 9 a.m. data, and then the market will get on its way. Obviously, if we see a change in that, right, if we get directional prior to the ISM, if the number's been leaked, which I believe happens occasionally, you'll know that we're probably going to take it in the direction of the initial drive. But for right now, and that's, by the way, I want to cover that for a second. When you lay out a scenario for your trade plan on your day and you don't get what's expected, right? That's not a point to freak out. That's really good information. It tells you to give a heads up that there's a new game plan in place and you need to simply make an adjustment to your trade plan. And that's what I failed to do on Friday, by the way. I was looking for a move, open, test, and then a move lower, right? And for whatever reason, I was tired, what have you. When we cleared above Globex, we held above Globex lows and we cleared Thursday's low, right, above. I failed to make an adjustment on my trade plan and I got stuck mentally with this, we're going to have a move to the downside. And I ended up fighting, even though I did okay. I ended up losing a point in ES, right? But and the base trade plan worked. I mentally got in my head, hey, we're moving lower. Hey, we're going to move lower, right? This is going to give us a test lower. And we never got that test lower. And I never broke from that concept until the very end of the day. And it shows you, also, I took a terrible trade in NQ at the end of the day. And what it shows you is even for an experienced seasoned trader, right? Once you let your balanced game plan go and go, what is the market telling me? And you start trying to enforce what you feel is a scenario the market should play out, it really screws your ability to take good balanced trades and manage those trades well. So keep that in mind when you're trading, to stay balanced. If you find yourself all of a sudden getting frustrated by your trades, if it looks like you're going to get stopped and it's not working the way you want it to, that's the time to take a breath, slow down, maybe take a 10-minute walk and come back and go, what's the market telling me? How important is it that I trade on this particular day or at this particular level, right? And then remind yourself it's not about any one trade and it's not about any one day. And so also check that I get enough sleep. Am I relaxed? Is there something going on in your life that's screwing with your ability to think rationally, calmly, and in a balanced fashion? All those things can throw you off on your game plan, and then you can get to the end of the day and look and go, just like I did, go, damn, I had a great trade plan. I should have made a lot of money on Friday, and I ended up down on the day, even if it was just slightly, right? And that can be very frustrating. The important thing is if you get to that point in your trading day that you stop. At the end of that day, goes just one day, even if it was a large loss. It's just one day. Review your trading plan. Make sure you are locked onto that trading plan during the day, and you're reacting to what the market's offering and not reacting to what you think should happen on these trade plans, right? The base plan is very simple. First time into the zone, hopefully at least a 6-point rotation in, right? That'll help us determine where in the zone we want to take that trade. And then the last piece is take the trade out at 2 points. Anything other than taking that entire trade out at 2 points increases the mental difficulty of the trade, right? And increases some uncertainty. How do I compensate for that uncertainty? I bring my stops down and I balance my risk out, right? And I'm willing to accept that I might get stopped on that trailer and give up the profit that I have. But I can't have both worlds, so I need to make that decision before I get to that zone and hopefully before I'm in that trading day. Anyways, my name is Simon. I hope this helped, guys. I'm out. I'm going to see if anyone had any questions here real quick. Nope, looks like everyone's good. Guys, have a great day. Make a ton of money. And we're obviously trading back, back above gap fill at this point. And again, my guess is we're going to balance right into that ISM number. And we may, if there's some shorts out there, get a little squeeze right into ISM. And then the real day will start. So talk to you later, everyone. Have a great day.